Let's talk about a common misconception in the boardroom that sustainability is a cost center, a line item for corporate social responsibility that drains the budget. If you still view it that way, you're leaving significant financial value on the table. The reality is that weaving sustainability into the very fabric of your corporate culture isn't just good for the planet. It's a powerful driver of profitability and a critical shield against risk. I'm not talking about a superficial PR campaign or a side project for the marketing team. I'm talking about a fundamental operational shift that impacts your bottom line, your ability to attract capital, and your long-term resilience. Today we're going to move beyond the why and dive straight into the how much. We'll break down the tangible financial returns and the concrete risk mitigation strategies that make a sustainable culture one of the smartest investments your company can make this year. This is about building a business that is not only successful today, but is also built to thrive in the future economy. If you're new here, please subscribe and like, because I share tips to help you improve your career. The most immediate financial benefit comes from operational efficiency. When you embed sustainability into your culture, you're fundamentally changing how your company views resources. Waste is no longer just a cost of doing business. It's an inefficiency to be eliminated. This mindset shift leads to direct cost savings. Think about energy consumption. A culture that values sustainability will naturally seek out ways to reduce energy use, not because it's mandated, but because it's part of the company's DNA. This leads to investments in energy-efficient lighting, HVAC systems, and equipment that have a rapid payback period. The same applies to materials. A sustainable culture encourages circular thinking. How can we reduce raw material input, reuse components, and recycle waste? This directly cuts material costs and can even create new revenue streams from byproducts that were previously considered waste. But the financial upside extends far beyond the factory floor or the office building. There's a powerful impact on your cost of capital. Investors are increasingly applying environmental, social, and governance (ESG) criteria to their investment decisions. A strong, authentic sustainability culture is a signal to the market that your company is well managed and forward-thinking. It demonstrates that you understand long-term risks and are proactively managing them. This perceived lower risk profile can lead to a lower cost of debt. We're seeing this with sustainability-linked loans, where the interest rate is tied to the achievement of specific ESG performance targets. Achieve those targets, and your interest payments go down. It's a direct financial incentive for building a better business. Similarly, equity investors are allocating more capital to companies with strong ESG credentials, which can boost your stock price and make it easier to raise capital for growth. Now, let's talk about risk management, which is where the financial argument becomes undeniable. A company without a sustainable culture is exposed to a myriad of risks that can have catastrophic financial consequences. Regulatory risk is a prime example. Governments worldwide are implementing stricter environmental regulations, from carbon pricing to packaging laws. A company that has already integrated sustainability is positioned to adapt quickly and at a lower cost. They see regulation not as a threat, but as an opportunity to get ahead of the curve. Conversely, a company that is reactive will face significant compliance costs, potential fines, and operational disruptions. Then there's reputational risk. In today's hyper-connected world, a single environmental misstep can go viral, leading to consumer boycotts, difficulty attracting top talent, and a plummeting stock price. A deep-rooted sustainability culture acts as an insurance policy against this. It means your employees at every level are making decisions aligned with sustainable values, drastically reducing the likelihood of a PR disaster. It builds a reservoir of trust with your customers and the public. When you operate transparently and ethically, you earn a license to operate that is incredibly valuable. This translates directly to brand equity and customer loyalty, which are tangible financial assets. Customers are increasingly voting with their wallets, and they are choosing brands that align with their values. A sustainable culture isn't just about avoiding negative press. It's about actively building a brand that people want to support, which drives revenue and market share. So the business case is clear. The real challenge for leaders isn't understanding the why, but mastering the how. How do you move from a high-level commitment to a cultural transformation that delivers these financial results? It starts with leadership, but it can't end there. The most effective strategy is to embed sustainability into your existing business processes, rather than treating it as a separate initiative. Let's start with your core operational frameworks. Integrate sustainability metrics directly into your key performance indicators. Instead of having a standalone sustainability report, make energy consumption, waste diversion rates, and supply chain ethics part of the standard operational dashboards that managers are evaluated on. This sends a powerful message that these are not secondary concerns, they are integral to performance. When department heads are accountable for their environmental footprint in the same way they're accountable for their budget, you'll see innovation flourish. Next, leverage your procurement department as a force multiplier. Your company's culture extends beyond your four walls into your entire supply chain. By setting clear sustainability criteria for your vendors and weighting these criteria significantly in your selection process, you create a ripple effect. You're not just improving your own footprint, you're incentivizing your suppliers to adopt more sustainable practices. This is a critical risk management strategy. A sustainable supply chain is a more resilient supply chain, less vulnerable to disruptions caused by environmental regulations or resource scarcity. Make sustainability a non-negotiable part of your vendor code of conduct and audit for compliance. This transforms your procurement function from a cost center into a strategic driver of value and risk mitigation. Perhaps the most powerful lever you have is your employee base. A sustainable culture cannot be mandated from the top. It must be cultivated from within. Create channels for employee-led innovation. Establish green teams or sustainability task forces with representatives from across the organization and give them a real budget and the authority to test and implement ideas. Some of the best cost-saving ideas will come from the employees who are closest to the processes. An engineer on the production line will see a waste stream that management never notices. An employee in the office might identify a simple switch to cloud-based document sharing that drastically reduces paper consumption. Empower your people to be agents of change and recognize and reward their contributions publicly. This not only drives bottom-up engagement, but also uncovers operational efficiencies that would otherwise remain hidden. Finally, align your financial incentives. If you want a behavior to become cultural, you must reward it. Tie a portion of executive and managerial bonuses to the achievement of specific, measurable sustainability targets. This could be a reduction in carbon emissions, an improvement in water efficiency, or progress on diversity and inclusion goals. When financial compensation is linked to sustainable outcomes, you ensure that these priorities are taken seriously at the highest levels of decision-making. This moves sustainability from a nice-to-have to a fundamental component of business success. It demonstrates that the company's commitment is real and that leadership is invested in the long-term health of the organization, not just the next quarter's earnings. If you're finding this helpful, please subscribe and like, because it helps us create content that matters to you. Also, if you want to take your skills further, check out our executive education and executive coaching programs at execbeat.com. A cultural shift of this magnitude requires rigorous measurement. You cannot manage what you do not measure, and this is especially true for something as intangible as culture. The key is to move beyond vanity metrics and focus on data that directly correlates to financial performance. Start by establishing a baseline. Before you launch any new initiatives, measure your current state. What is your company's carbon footprint? How much waste are you sending to landfill? What is your energy consumption per unit of output? This baseline is critical because it allows you to track progress and calculate your return on investment. After you implement your strategies, you can directly attribute cost savings to specific actions. For example, if you invest in LED lighting and see a 20% reduction in your electricity bill, you have a clear, quantifiable ROI. This data is not just for internal reporting. It's a powerful tool for communicating with investors and stakeholders, proving that your sustainability efforts are generating tangible value. To truly understand the cultural impact, you need to measure both lagging and leading indicators. Lagging indicators are the outcomes, like the reduction in energy costs or the decrease in waste disposal fees. These are essential for proving financial ROI, but leading indicators are what predict future success. These are metrics like employee engagement scores on sustainability surveys, the number of sustainability ideas submitted by employees, or participation rates in volunteer programs. A rising trend in these leading indicators signals that the culture is taking hold. If 80% of your employees feel empowered to suggest sustainable improvements, you have a culture that is poised for continuous innovation and long-term resilience. Regularly surveying your workforce gives you a pulse on the cultural transformation and allows you to course correct before problems arise. The final and often most overlooked component is communication. A sustainable culture thrives on transparency and storytelling. You must consistently communicate both your goals and your progress. This isn't about greenwashing, it's about building trust and maintaining momentum. Share success stories internally. When a team successfully reduces packaging waste, celebrate that achievement company-wide. Explain not just the environmental benefit, but the financial saving it generated. This reinforces the connection between sustainable actions and business success. Externally, transparent reporting builds credibility with customers and investors. It shows that you are accountable for your commitments. This transparency itself becomes a risk management tool as it demonstrates a proactive approach to managing your company's impact on the world. Ensuring the longevity of this culture requires making it a permanent part of your corporate identity. Integrate sustainability into your onboarding process for new hires. From day one, employees should understand that sustainable thinking is a core value and a key to career advancement within the company. Weave it into your learning and development programs, offering training on sustainable business practices. The goal is to reach a point where sustainability is simply how we do business here. It's not a separate program or a special initiative. It's the filter through which every decision is made, from a major capital investment to the choice of office supplies. When that mindset is fully embedded, your company becomes inherently more efficient, more innovative, and more resilient. You create a self-reinforcing cycle where good for the planet consistently translates into good for the bottom line, building a business that is built to last. Ultimately, the goal is to stop thinking of sustainability as a separate initiative and start seeing it as the foundation of a modern, profitable business. The techniques we've discussed, integrating metrics into KPIs, leveraging procurement, empowering employees, and aligning incentives, are not just about being responsible. They are a direct path to lowering operational costs, reducing your cost of capital, and building a formidable defense against regulatory and reputational risks. This cultural shift transforms sustainability from an expense into a strategic investment that pays continuous dividends. Your company becomes more efficient, more attractive to top talent and investors, and fundamentally more resilient in a rapidly changing world. The key takeaway is this: a sustainable corporate culture is the ultimate competitive advantage for the 21st century enterprise. For more strategies on building resilient and high-performing organizations, subscribe to ExecBeat and turn on notifications so you don't miss our next leadership deep dive. Thanks for watching. Please subscribe and like because it helps us bring you more free videos. And if you're ready to grow your career, visit execbeat.com to learn about our executive education and coaching.